Hey guys, I just kind of wanted to share my thoughts quickly with you guys tonight on basically the cannabis sector, what I think has transpired over the last 1 to 2 years, and what I think the sector will, um, just kind of what my forecast will be for the next year as well. Um, and some of the key factors I look for investing in a pot stock. Um, yeah, so a little bit about me. Started investing in the stock market about 17 years ago, and I've invested in a bunch of different sectors: oil and gas, healthcare, tech. Maybe the last 2 3 years ago, I was in blockchain, um, and now I've taken to a liking in investing in the cannabis sector. I'm a trader by profession. I trade natural gas and electricity for a living, done that for 13 years, or still doing that for 13 years. And I kind of thrive on volatility, so that's kind of why I chosen the cannabis sector. I like 5 to 10% moves. I do day trade a lot, but, so I kind of like volatility. I trade some options, and I like companies that have high liquidity. So yeah, it's a little bit about me. So how I go about investing in pot stocks, I kind of look for 5 key factors or fundamentals in a stock. So number one is I look at the balance sheet, and I look for leverage levels. So if you have high debt levels, it's probably not a company that I'm interested in. So you need to have healthy cash balance, low debt, and if you're free cash flow positive, that's a bonus. So there are some companies that hit all those metrics. Village Farms, Trulieve, some of the smaller like extraction companies like Labs and Valin Growworks. Those are some of the companies that hit that metric. And on the other side of that, you've seen companies that have high debt levels that have just been roasted by the market. Companies like Cannabis, MedMen, Green Growth Brands, Sundial, Cannabis. Those companies have just been, short sellers have just hopped on that and taken those things almost down to zero. Those are kind of unsustainable types of businesses that they have to go to the market every 3 to 6 months, and since the capital markets have dried up, it's going to be harder and harder for these guys to raise reasonable equity without diluting the crap out of shareholders. So that's kind of the first key metric I look at. The second one I look at is if you're a low cost operator. So if you're, the line I draw is, can you get below $1 a gram? Because the market is trending towards that in terms of if you're selling wholesale to some of the provinces. I've seen levels where these guys are selling at $2.50 a gram to the provinces. So if you can be, below $1, I think you have you have a sustainable business. So companies, like Village Farms, Organigram, Aurora Cannabis, they are below $1. So those are the types of companies I look for. Number 3, I look for how well is your product selling, and that's something I think a lot of people kind of overlook. It's not all about capacity. Like, you can build capacity 300,000-400,000 kilograms a year, but if you're only selling 25% of your product, the rest of it, sure, you can extract it, keep it, and sell, oils down the road. But if your product is not selling now or not resonating with customers, that could be a long-term issue for you. So I look for companies that have good selling products. I kind of look at the Ontario Cannabis website. I kind of look at, who are the top 2 or 3. So you got Canopy, Aurora, and Village Farms kind of stands out since they're a tenth of the size compared to some of those bigger guys, and their products are just screaming off the shelves almost. So yeah, that's number 3. Number 4, I look at how lean is your company. So we're in the early days. Some of the bigger guys like Cannabis and Aurora, they were hiring like crazy. So they have like thousands of employees. So their SG&A costs are like, I don't know, hundreds of millions of dollars. I don't want to invest in a company that you have to make so much money just to cover those costs. So you want a lean company. So Village Farms kind of sticks out because they've been growing tomatoes and vegetables for 20, 30 years. And when they brought Pure Sun Farms up and running, they already had that facility. And I doubt they hired hundreds of people just for that extra grow op. So they run a pretty lean type of business, and that's why their costs are 60 cents a gram. I think Organigram is kind of the same way. And some of the other companies like Hexo were way too bloated, and as you've seen, they've had to fire 20% of their staff, and they still have probably 800 to 900 employees, which I think is still too much. So anyway, that's just my opinion. Number 5, kind of the last thing I look at, I look at how transparent are you. Like, if you come out with your financials and you're hiding what your cost per gram is, you have high accounts payable, and you don't mention anything about what is in there, and you have like a complicated debt structure. You got all these convertibles, debentures. You have excessive management pay. Those types of things, I just don't care for. So as long as you're transparent in your financials, you show kind of where your costs are going for the year. How much money do you need for your capacity build outs and for any other additional finances, or how much money you'll need down the road. That's kind of, I want very transparent balance sheet and income statement, cash flow statement. So those are kind of the factors I look for. And after looking at all of those, there's only a few companies that I am actually comfortable with investing in. So the first one is kind of Village Farms is my pick for one on the Canadian side. That Pure Sun Farms joint venture with Emerald is done really well over the last year. They've been selling products, or it's been really popular with customers. They're one of the leading cost producers, or lowest cost producers, and they have excellent optionality in the U.S. if the U.S. does legalize marijuana, which I think will happen in the next 1 to 2 years. So they have some Texas facilities and some facilities in Mexico, and Mexico might legalize soon as well. So they have plenty of upside. The only thing that's going on right now is they're fighting with Emerald, and that's probably created, in my mind, a buying opportunity, because I think in the next 6 to 12 months, Emerald will probably have to, file for bankruptcy or whatever, because they are running out of cash, and I think over time Village Farms is just going to take a bigger and bigger share of that Pure Sun Farms joint venture. So the market should value them at a higher valuation if they take a bigger chunk or take a majority ownership in that venture. And on the US side, I own Trulieve, which has like a 50% market share in Florida, and Florida is, the population is almost as big as Canada, so that's pretty big. And they're slowly growing out of Florida, but they're growing in a way where, some of that free cash flow they're putting towards growing the business organically, and they're not, over leveraging themselves and taking on massive levels of debt just to, steal market share from other competitors in other states. So they run a pretty tight ship over there, and those are kind of the two companies that I think stand out. And I think over the next year or two, you'll start to see more of the good companies are just going to start trading higher, or they're not going to be trading with the rest of the shitty pot stocks, or you're going to get a divergence. So I think at least 50% of most of these pot stocks are just pump and dumps, and they're all they were to do is they were there to get the management rich, and then they go under after a couple of years, and the true survivors that you'll see are the ones that actually have experience in growing pot. Like Village Farms has 30 years of experience in growing vegetables, so cannabis is something that they would know how to grow and grow well. And I feel that about Cannabis as well. I think Cannabis probably runs better as a private company instead of a public company. I think they have the same experience in growing vegetables. They were in the propagation business. It's just they came to the market about a year too late, and the capital markets shut them down. So now they have all this high interest level debt that they have to manage, and the market has just destroyed the shareholder value. So yeah, in my opinion, I think maybe they survive, but shareholders are going to get diluted, because every 6 to 12 months they're going to have to come to the market again for cash. So yeah, and the rest of the companies are they're never going to get to that cash flow positive goal, I think. And yeah, you'll get industry consolidation and bankruptcy in the next 12 months. So that's kind of just my take, and these are just all my opinions. So any stock I recommend, you should do your own due diligence. And yeah, I think for the next video, I'll just talk about how to value a pot or a cannabis company and kind of the metrics I look at. So anyway, that's all for tonight. Yeah, feel free to message or comment after the video. All right, thanks.